All right, welcome into Market Day Report. I'm Scott Shellady, otherwise known as the Cow Guy. Thank you very much for joining us. Why don't we take a look at the markets so I don't have to say Cow Guy again. Let's take a look at what we've got going on in corn. You know, folks, it just doesn't feel good, does it? It looks like we're a little bit of backfilling, a little bit of risk off. I mean, you call it what you want, but it's lower. Maize down 10 cents to 6.62 and a quarter, and that's about what, 0.75% off the lows there. Go out to the new crop. Look at that. Dees down 9 cents to 5.54, which is a new low. So we have been as high as 563.5. We lost that 560 line like a hot knife through butter. Let's take a look at this one's no better. Soybeans. The fronts are down 17 and a quarter. That's May. 14.89 and a quarter is last there. It's a penny off the lows. But let's go out to Novi new crop. 13 and a quarter cents lower there to 12.95 and a quarter. We lost the 13 handle. That is psychologically going to hurt, right? So we'll leave that as it is and move on and see what we got anything in Chicago wheat that's any better, and we don't. Chicago wheat, the May contract there is 14.5 cents lower to 6.67 and a quarter. Dees is off 14 and three quarters to 7.05, and that is a new low. Both of those were new lows, May and Dees. Ouch. All right, let's see if we got anything better in Kansas City, and I don't think we do. We don't. This is the hard red wheat down there, 22 cents lower in the May to 8.39 and three quarters. I guess the good news is we're 3 and three quarter cents off the lows there. Look at the Dees though, 23 and a quarter cents lower to 8.22 and a quarter. And that too is about 3 cents off the lows. All right, that's the first one that hasn't been really plumbing the depths. Let's see about Minneapolis. The spring wheat up there, 12 and three quarter cents lower, and that May contract to 8.54 and a quarter. Let's go out to the Dees, 12 cents lower there to 8.55 and a half, and that's about a penny and a half off the lows. And then finally, let's take a look at cotton. We'll get to our next guest analyst. Cotton, it hurts today, 360 points lower. We lost the 80 line in May. 79.64 is last. Look at the high, 83.25. Jeez. Dees off 281 points to 80.69. All right, let's bring in our next guest analyst. That'll be Tommy Grisafi, Advanced Trading. I believe he's still in Valparaiso. I haven't heard about any plane flights back to Fargo. All right, Tommy, make us smile. This one doesn't feel very good, does it?
No, it doesn't. And people are starting to call in. You had a fan favorite of the Cow Guy call in from Canada. He wanted everyone to know that it's snowing in Canada, and
wow.
I do believe people know that, and that may come into play. And I always tell people when they call in, they don't have futures and options account. Wheat should be higher. I'm always like, would you like to buy 100 futures or 1,000? And the scariest client's the one who says, I know wheat's going to go up and buy me one.
Yeah, right.
I've never seen Paul Tudor Jones say, I think the Dow's going to crash in 1987. Sell me one future, right? So at some point you gotta call people out a little bit and say, put your money where your mouth is. If it should be higher, then place the bet, right? And at some point though, Scott, it's tricky because people open hedging accounts, but they deep down don't want to hedge. As my friend Brian Splitt says over at agmarkets.net, people really just want to make money in their futures and options account, whether the market goes up or down or everything else.
That was always
they pretend they want to be hedgers, but they really don't. And that he told me that year one of being a broker. He said, remember that, because when the market goes down and they're not hedged, it's because they really aren't hedgers.
Right. Well, I used to say that all the time when I was on your side of the table. The worst years I would have, not financially, it was just the expectations and the bar was set so high, is when my farming customers would make money in their hedge account and on the crop, right? So both of those things did well, and then all of a sudden that's the new standard, all right? That has to happen every year.
Yeah.
So if you want to hedge my crop, you better sell the high of the year.
I think that's Joe Vaclavic named his company Standard Grain, right? It's just the standard.
Yeah, right.
You know what the Standard Club is over in Chicago, right?
I mean,
there's all types of standards, right? So we need to meet expectations. I'll tell you this before we go on break. We had some clients aggressively hedge 24 over the last month. 24 corn, aggressively hedge. There's a lot of things you could do with futures, options, everything else. So there's all types of people. There's people who aren't smart enough to realize that May is 40 cents over July and they think corn's going higher. And then there's people who are hedging 24. So we see everything in the middle. We're like a doctor. We treat them all, brother. Back to you.
All righty. That's great stuff. I want to take a quick break on that. Tommy Grisafi, stay right there. We're going to go away, pay some bills. Suzanne's expensive. We're going to be right back after this. All right, what a great segue. Welcome back into Market Day Report. Let's take a look at the livestock. I'm sitting here wearing a livestock jacket. You might as well bring up those prices. Let's start with the live cattle in Chicago. Well, where do you want to start? Let's start in the June. That's up 52 cents to 164.10. We're 15 cents off the high. Very rarely get to say that lately. Let's go out to the D, 65 cents higher there to 172.22. There you go. We'll take that. That's 10 cents off the highs there. All right. How about feeder? So this has turned around the last hour and a half since I've been sitting down here. So this is good. May feeders in Chicago are up 87 cents to 211 spot 35. That's 25 cents from the highs. Let's go out to let's go to August, right behind it. 202 higher, $2.02 higher at 228.80, and that is 15 cents off the highs there. Let's move on to lean hogs. This one's kind of sick. This one has not been doing well. $1.75 lower in the May to 77.02, while we've got $1.20 lower in June, right behind it to 85.22. And let's get back to Tommy Grisafi. Hey, with advanced trading in Valparaiso, he's our guest analyst waiting in the wings. Anything jump off that page at you, or if you've got something else to say, some other product, the floor is yours, sir.
I will stick to the meat segment here, and dynamic moves in feeder cattle. They are consistent. They must be loving these lower grain prices. Maybe the numbers look better. The cash market's absolutely on fire. And in the end, the only reason we have a futures market is because we have a cash market. As you remember, many years ago, farmers were working all year growing grain, bringing it to Chicago. By the time they get to Chicago or the marketplace, the price would fall off the cliff. So there's a true cash market. There's a true futures market. Understanding the difference between two is real art. Now, cattle are tricky because there's only a few people in the world who really get to set that price. I mean, it's not like all these people watching right now who raise cattle are bringing them to a local processor and selling you a half a beef and me a half a beef. I mean, they're a huge percentage of the meat products go through very large corporations. And like I said on your show just a few days ago, like in the movie Rounders, if you're playing poker and you don't know who the sucker is in the first 5 minutes, it's probably you, brother.
It's always me. It seems like it's always me. I keep getting invited back. I wonder what that means. And again, I keep leaving with less money. So that probably tells you what that means. All right, thanks very much, Tommy Grisafi. He's with Advanced Trading. Advance is a big friend of the Cow Guy Close.